Hey there, and welcome to the Market Access. Today we're going to talk about how to start investing in the stock market. I am going to guide you through the 5 initial steps that are necessary to start investing in the stock market. Are you ready? Let's get started. Step 1. Do your research. First of all, if you want to invest your money, you better know what you're buying. You wouldn't go to a car dealership where all the cars are covered by a cloth and just randomly pick one without knowing the model, the size, engine, color, and so on. If you go buy a car, you research all the brands that you like, you choose a model that you think it would suit you, then pick the type of engine and check out what kind of upgrade packages you could get. Only once you know exactly what you're getting out of your money, you would finalize the purchase. My point is, if you go through all those steps when you buy a car, you should definitely put the same time and effort, if not even more, in researching the financial instrument in which you decide to invest. Do you know what stocks are? Are you sure you want to invest your money on this type of asset? Are you aware of the risks? Do you know how the market works? Are you willing to live an emotional roller coaster? One of Warren Buffett's most important rules is to never invest in something you do not understand. Therefore, your research is the most important aspect. Don't worry, luckily you have me here, and I will help you with the research and financial education, and I will try to shine at least some light on the immense world of stock investing. Step 2. You need money to invest. Obviously you need money to invest in stocks. You can't buy a share with the case of homegrown potatoes from your backyard. Anyway, jokes aside, you do need money to buy stocks, but contrary to widespread beliefs, you do not need huge amounts of money to start investing. You can start out with any amount you want. Needless to say that every return or loss will be proportionate to the amount of money you decide to invest. Let's say you invest $100,000 and you get a 5% return on your starting capital. You will then have $105,000. However, if you invest only $1,000 and get the same return of 5%, you will end up having $1,050. Also, based on the amount you would like to invest, there are certain stocks that perhaps you cannot buy. For instance, if you would like to purchase one share of Amazon, just to name one, you would have to invest approximately $3,271. That's the stock's price today. For the purpose of this video, I will not be taking into consideration the use of financial instrument called leverage, which allows you to buy more shares than you could actually afford by borrowing money from the financial institution through which you're buying those shares. If you would like me to create a video on leverage and how it works, let me know in the comments below. Money is also crucial to determine your investment strategy. There are 2 common cases. Either you are just getting started in investing and you do not have any money saved up, so you decide to buy, let's say, $500 worth of stocks each month, or you do have $40,000 set aside and you decide to make a one-time purchase and invest all the capital at once. The most important thing is that you should never, ever invest all of your money. Before you start investing, you should have already created an emergency fund. The amount you decide to invest must be a reasonable amount that would not change your lifestyle whether you had it or not. Step 3. Pick an investment strategy. Do your research on which strategy you want to take. There are many different investing strategies that you could apply. Just to name a few, there's day trading, dividend investing, buy and hold, etc. Before you pick a strategy, you have to study it and research it ahead of time, because you will realize that there is so much information out there and so many possible financial instruments that you will get lost very quickly. The most simple and most common strategy for someone who is just getting their foot in the door in the stock market is the buy and hold strategy. Simply put, you buy a stock and you hold it in your portfolio until you decide to sell it, hopefully with a high return. Perhaps you already have saved up a certain amount on your savings account that you would like to invest in the stock market to receive a dividend. That's another option as well. The important thing is that you decide ahead of time which strategy you will choose, because the stock you will choose will be based on the strategy you picked. Step 4. You need a trading platform. You need to choose a platform that will enable you to access the stock market. Most banks offer a trading service which you could activate. If you do have a bank account, go ahead and ask your advisor if your institution provides such a service. Most likely they will. If they don't, you need to open an account with a financial institution that provides this service. You can also sign up online trading platforms, but in my opinion, it is much safer for a new investor to go through a bank at the beginning. If you do decide to go with the online trading setup, please beware of CFD platforms. If you do not know the difference between stocks and CFDs, I will upload a video soon that will explain the difference between the two. Step 5. Leave your emotions out of this. The 5th step is training yourself and preparing yourself to not get emotions involved in the process of investing. Emotions are what causes the majority of people to lose their money, and I sure do not want this happen to you. I cannot stress this point enough, but you need to leave all your emotions out of this, and you need to be calm and rational at all times. Even when you open your platform to check how your investments are doing, and you will see that some of the stocks you picked will be down even 20%. And trust me, it will happen. The market is volatile. One day it goes up and the next it goes down. That is just how the market goes. You need to accept it and you need to embrace it. But most importantly, do not get influenced by the market's emotions. So here's a little recap. Step 1. You need to do your research. Step 2. You need money to invest. Step 3. Pick an investment strategy. Step 4. You need a trading platform. Step 5. Leave your emotions out of this. Alright, thank you for watching this video. If you enjoyed the content and it provided some value to you, excellent! Please do give it a thumbs up and subscribe to the channel.